For the past 3 years, the AI story has been about cloud data centers. Bigger models, bigger GPUs, bigger power bills. That story is ending. The next phase moves AI into the physical world, and it has a different bottleneck. The next AI supercycle won't be won in the cloud. It will be won at the physical interface, the layer where intelligence meets the real world. Phones, cars, robots, sensors, industrial systems, the connective tissue between them. Macro investor Jordi Visser has been writing about this regime shift for over a year, and 2026 is the year he expects physical AI to become a dominant, investable theme. The thesis: AI is becoming a scarcity story, not an abundance story. The more intelligence pushes into the economy, the more physical capacity that economy has to build to support it. The numbers are structural. Robotics market, $80 billion today, projected $200 billion by 2030. Autonomous systems scaling from research demos to commercial deployments. Smart infrastructure rolling out across roadways, logistics yards, and factory floors. Humanoid robots moving from labs to production lines. But here's what Wall Street keeps mispricing. When AI moves from data centers into physical platforms, the bottleneck changes. Compute density rises exponentially, but compute alone doesn't make systems autonomous. They need to see and understand the real world. For autonomous systems to work in the physical world, they need three things working together. Sense the environment, understand what they're sensing, act on that understanding in real time. The data center build-out had clean winners: NVIDIA for compute, Marvel for interconnect, hyperscalers for real estate. The physical AI build-out has a different structure. The constraint is not a single component. The constraint is integration. Lidar alone has limits: rain, fog, dark surfaces, reflective materials. Cameras alone fail differently: depth perception, low light, weather. AI compute alone is useless without sensor input. Each modality has blind spots the others don't share. The real bottleneck is sensor fusion, the integration layer that combines lidar precision with camera color and texture, processed through AI models trained on millions of real-world scenarios. This is not a chip problem. This is a platform problem. This is why we're seeing consolidation across the sensing industry. Microvision closed on Luminar's lidar business in February 2026, winning a Section 363 bankruptcy auction at $33 million. Ava is partnering deeper with NVIDIA on automotive perception. Tier 1 suppliers like Bosch and Continental are scaling unified sensing platforms. The industry is moving from component sales to platform sales because customers don't want modular sensor stacks anymore. They want unified perception systems. This consolidation has a winner, takes most dynamic Wall Street still hasn't priced. Once a perception stack is qualified into an autonomous customer's product, replacement requires 12 to 24 months of revalidation. That's a moat written in time. The smart money isn't betting on which leader wins or which camera wins. The smart money is betting on which platform integrates them all. There's a company that just made the strategic pivot the market hasn't fully priced. Ouster, ticker OUST. In February 2026, Ouster closed its acquisition of Stereolabs, a French AI vision company that has shipped over 90,000 Z cameras to more than 10,000 customers worldwide. The deal, roughly $35 million in cash plus 1.8 million shares. What it bought wasn't just hardware, it was a foundational AI model for stereo depth perception and thousands of developers already building on Stereolabs software. This is the pivot. Pre-Stereolabs Ouster was a lidar pure play in a crowded market. Post-Stereolabs Ouster is positioning as the first unified physical AI sensing and perception platform, combining lidar, cameras, AI compute, sensor fusion, and perception software in one integrated stack. The financials track the story. Q3 2025 revenue, $39.5 million, up 41% year-over-year. 11 consecutive quarters of growth. Gross margin expanded to 42%, up roughly 20 points from where it sat 2 years ago. Stereolabs generated approximately $16 million in 2025 revenue and ran EBITDA positive, which accelerates Ouster's path to overall profitability. Customer base spans 4 verticals: automotive, robotaxis and last-mile delivery, industrial, warehouse automation and yard logistics, robotics, autonomous mobile robots and humanoid trials. Smart infrastructure, over 1,200 deployed sites monitoring 65 million square feet of roadways and facilities. The geopolitical layer matters. Chinese lidar players like Hesai and RoboSense dominate cost-driven segments, but Western customers increasingly prioritize non-Chinese suppliers for sensitive applications. Defense, critical infrastructure, automotive primes, all repricing supply chain risk after Chinese export controls on critical materials. Ouster is US headquartered, with European operations expanded through the Paris-based Stereolabs team. Honest caveats: Ouster is not yet group-level profitable. Valuation reflects growth expectations. Competition includes EVA, Bosch, Continental, and Chinese players in price-sensitive segments. The platform thesis requires execution, not just acquisition headlines. Stereolabs integration must deliver real customer pull, not narrative. But the alignment between Visser's physical interface layer thesis and Ouster's strategic positioning is direct. They use the same language. Physical AI is literally how Ouster describes itself. 3 forcing functions are converging in 2026. First, AI deployment is moving from cloud experimentation to physical reality. Customer pipelines are real, not hypothetical. Second, sensor industry consolidation is happening now. Luminar bankrupt, Stereolabs acquired. The window for platform position is closing as Tier 1 suppliers move in. Third, the software layer creates recurring revenue. Hardware sensing is commoditizing. Perception software, AI models, and fleet learning networks are where margins expand and switching costs grow. The market still prices Ouster as a lidar company. The reality after Stereolabs is a unified physical AI platform, with software optionality and a multi-vertical customer base. Wall Street is one strategic story behind. The build-out of physical AI is happening, whether or not you're invested in the picks and shovels. Subscribe before the market catches up. TCKR is an independent media channel. Nothing in this video is financial advice. Always do your own research before making investment decisions.